Hey guys, welcome back to Explore. Today we'll talk about the crypto crash in 2021. 2 lessons from Bitcoin's history. Let's head into it. The recent crypto crash. The crypto bubble that pushed Bitcoin's value past 1 trillion and flooded the market with billions of dollars in fictitious digital tokens is about to burst. Bitcoin dropped nearly 22% to 35,000, wiping out more than 500 billion from the coin's peak market capitalization. It has lost all of its gains after Tesla Incorporated announced on February 8th that it will purchase the assets with corporate cash and accept it as a form of payment for its vehicles. Ethereum, the second largest cryptocurrency, has lost more than 40% of its value, while Dogecoin, a prank currency, has lost 45% of its value. Bitcoin is now worth less than half of what it was in April, when it hit a high of nearly 65,000. Tesla CEO Elon Musk, whose social media utterances have wiped the crypto world, is fueling the uncertainty. This sell-off was aided by a statement from the People's Bank of China on Tuesday reiterating that digital tokens cannot be used as a means of payment. This crypto crash is likely to be frightening for Bitcoin newcomers. However, those who are familiar with Bitcoin's past will not be surprised by this fall. Here are a few items to consider in order to bring the latest crash into context. While the adult sips a drink and looks at a chart on the screen, a child sits on an adult's lap taking notes. Also, make sure to write your thoughts in the comment section. Bitcoin has crashed before. The crypto crash of today is nothing new. According to Visual Capitalist, Bitcoin has plunged by at least 80% 3 times since 2012. In light of this, the current 41% decline appears to be relatively minor. For the record, studying stocks based on their chart patterns may be difficult, known as tactical analyses. After all, stock represents a small stake in a real-world business. Businesses mature, develop, and change over time. They might also struggle at times. Stocks do not always behave predictably for these and other purposes. Cryptocurrencies, on the other hand, are not companies. Yes, blockchain networks, the distributed ledger system that underpins cryptocurrency, can be used in real-world scenarios. However, blockchains are not the same. Even if blockchain technologies gain widespread adoption, this does not necessarily imply that the value of their related digital currencies would rise. Cryptocurrencies, in my view, are simply a case of supply and demand. As demand for coins exceeds supply, prices raise. As a result, I assume that examining the historical trend of Bitcoin's chart could be beneficial. Demand for Bitcoin is difficult to forecast. However, previous crashes occurred when the long-term utility of a product was questioned. When China first announced cryptocurrency restrictions in 2017, for example, Bitcoin experienced a significant drop. Similarly, new clarifications from China have aided the current crash. Its people can no longer use it as a means of payment. Other countries have proposed similar restrictions on cryptocurrencies from time to time. When something casts doubt on Bitcoin's long-term viability, demand is momentarily stifled, and a crash occurs. And if the latest collapse meets the historical trend of a drop of 80% or more, Bitcoin would still have a long way to fall from its current position. Bitcoin would drop to about 13,000 if it fell 80% from its previous peak. Bitcoin has always bounced back. Bitcoin's supply is limited at 21 million coins. According to its protocol, there are about 18.5 million people on the planet right now. However, new Bitcoins are mined and circulated on a regular basis. As new blocks are mined, approximately 900 new Bitcoins are published every day. The Bitcoin mining reward is, however, cut in half every 4 years. A halving case is what this is known as. With each new block, miners were given 50 Bitcoins at the start. However, 3 halving events have occurred, lowering the current reward to 6.25 Bitcoin per block on November 28, 2012, July 9, 2016, and May 11, 2020. Previous halving events occurred. Many Bitcoin investors were anticipating major profits from cryptocurrencies in 2020. 2020. In the past, the years following the halving case, such as 2013 and 2017, were some of the best for Bitcoin. This was also valid in 2020, which makes sense. Assuming that demand remains constant, the new supply constraints boost the price. However, prices inevitably rise to a point where demand is limited and the price falls. Nobody knows what the future holds, so no one can predict whether Bitcoin will rise or fall in the near future. However, I believe the chances are good that the price of Bitcoin will rise after the next halving case, which is scheduled for 2024. In the past, halvings have acted as catalysts. A final warning. Unfortunately, when it comes to Bitcoin, most people aren't thinking long term. According to CoinDesk, the recent crash resulted in $8 billion in forced liquidations on May 19th, owing to investors who bought Bitcoin on margin. Using borrowed funds to fund any investment, particularly one with a history of high volatility, is a bad idea. Margin can, admittedly, compound your gains if it rises. However, the inverse is also true. If there's one thing Bitcoin's past has taught us, it's to expect the unexpected. Buy some Bitcoin if you're able to keep a small stake for the long term as part of a diversified portfolio, but don't buy today in the hopes of making a fast buck. There will be sharp and long losses along the way, as history has shown. What do you think about the crypto crash? Do you think Bitcoin will recover quickly, or will we see the next bear market? Let us know in the comments section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video. Bye guys.